do you think today is a bad time to buy a house?
I think it's really, really hard to buy a house. Now, when it comes to house, primary residence, we think that that's more of a life decision than a financial decision. Should you buy a home right now? Well, is it part of the plan and part of your financial goals? Are you trying to establish roots? Are you trying to start a family? Is it something that's going to be part of your longer term plan? Well, then, yeah, by all means, go out and buy a primary residence, but it's difficult. House prices have kind of run away from you. Interest rates are super high. It's really, really difficult to be able to do that. So I would approach it less from, is it a sound financial decision? Is it one of my top financial goals? Now, from an investing standpoint, again, I think it's really, really hard because if you look back 4 or 5 years ago, prices were much more muted than they were now across residential, commercial, all types of real estate, and interest rates were a lot lower. So it was a lot easier to quote unquote make money a few years ago. That doesn't mean that there aren't still opportunities to buy real estate. I mean, we bought a commercial property here recently, but it happened because we had a really good opportunity at a really good price, and we had the capital to be able to do that. So I think for folks who are in that position, they can. It's just a harder path than it has been historically.
Time is your friend, though. This is not if it's a 3-year decision. Because one of the things I had a really smart attorney come visit us, and he was asking for career advice. I was like, go find who does what you want to get into, because it was a very specialized part of law. I was like, and go let them mentor you. And he's like, well, I'm house hacking. I was like, maybe because I love house hacking. It is one of my favorite things. I know that's one of part of your success story too, but you can probably even admit that somebody who's like in a very specialized thing, like a specialty of in law, that's probably the earning power is going to outweigh the house hacking benefits. So I always tell people, if you're making a decision, if you know you're going to move in the next 3 or 4 years, that's probably not going to be as easy for buying a house. But if you're 10 years and you got kids and you're trying to set down roots, I think that the spreading out that timeline, or if you know you're going to be in the property, will smooth out that purchase price.
I could be totally wrong here, and feel free to push back on this, but my recent hot take when it comes to real estate is that it's going to be the new college, in a sense that we're going to look back 30 years from now and say, oh, I wish I didn't buy a house.
I would have done that.
And I think a lot of people now are realizing that they didn't need a college degree to get the job that they wanted, but now they're saddled with $50,000 of student loans. I could see there being a case in the future that people are saddled with these mortgages and these overheads and these expenses that they never needed, when rents right now are pretty attractive compared to buying. And you don't need to buy a house when you could be as mobile as you can be today.
I agree with you on the economic sense, but you didn't realize probably that you're talking to 2 guys from South Atlanta. So we didn't even know you can make money on real estate until we moved to the state of Tennessee. Because I mean, my first house that when I sold moving up here, I basically all the prepayment I made was to pay all the negative equity, because we lost so much money on the move. But I still look back, I'm glad we lived in that neighborhood, because my kids made memories with a lot of the neighbors, and I go on annual trips with a lot of those neighbors. So community was very valuable. Now, if this was such a big financial transaction that it derailed my entire life, that's one thing. But I think there are some benefits to home ownership outside of just the financials.
Well, could you say the same about college, though, that there are benefits to going to college and socializing and, figuring out what you want to do?
It's the same rules, though, as long as it doesn't blow up the corpus of what you're trying to do. And a lot of people, and that's why we always give the guidance on student loans, if you're talking about that, don't run up more student loan debt than you're going to make in your first year's salary. Because how many people are out there getting, running up $100,000 of debt, and they're in these majors that they'll be lucky if they make $50,000 coming out of school.
But then I think it comes down to just being intentional about it. And I worry that a lot of people now have been told that buying a house is what you need to do.
That's where the problem is.
And
I do agree with that.
I think your analogy holds, and I think it's a great analogy that there are a lot of people that went and got a college degree, and that college degree was incredibly valuable. I went and got a college degree in financial planning, and it's worked out swimmingly well for me throughout life. So by all means, it was the right decision. But if you're someone who went out and got a college degree that was way too expensive in a field that you do not work in, was not the most prudent, pragmatic decision. It's no different than someone who goes out, okay, I'm going to buy my first home simply because I want to be in a home and it's more than I can afford and it doesn't make sense for me. Then yeah, they probably are going to look at it the same way. But there are going to be a lot of people who said, man, I wanted to go buy that first home and I got in the home and I started a family or I set up roots and I established that and I was there for 7, 8, 10 years and I built equity in that house and I was able to sell that house and go to the next house, I think that that's still going to work. But I agree with you completely. The idea that you have to buy a house to be financially independent or that it must be part of your financial plan, I think that's completely wrong. Just like I think the idea that you have to go to college is completely wrong. I think there's a lot of folks who do not need to go to college and are not going to need to go to college to be able to have tons of success in life.
What you said, taking an active role. What was the way you termed it, Graham? You just said
intentional.
Intentionality.
You have to be intentional.
Because let me tell you this. I'm talking about education. If you look at the percentage of people who work in their field of study, we found if you just go look at the population of student loans and others, 72% of people come out of college not working in their field of study. We survey our millionaire clients every year because we create content off of it. And you can't make up how close this stat came up. 73% of our clients work in their field of study. That's intentionality, the definition of intentionality. So that's why I think it's the same thing with a house. Do the math and you have to weigh. And that's what personal finance is personal, is that yes, there's going to be an economic and a math side of an analytical side, but there's also going to be the decisions of what's best for your family.
But what's also interesting is that when you look at college tuitions, they've risen alongside government subsidies.
Oh, yeah.
And when the government is providing all of this money, colleges figure out, well,
I'll just charge more.
I'm just going to charge more.
Pay it.
But a similar thing to a certain degree is happening with housing. When you see FHA loan limits increase, and all of a sudden you could put 0 to 3.5% down, and the government's willing to give you $800,000. Well, what do you think the seller is going to charge? They're going to charge what they can get.
More.
Isn't it amazing how the appraisals always come in at whatever?
It's exactly the thing. Now, for the appraisals, technically that's the market value of the house within a certain degree, because that's what someone's willing to pay.
An appraisal come back other than $1,000.
I mean, maybe in the Great Recession you did, but every other deal I've ever dealt with,
for the most part, they're always within a few percent.
Right there, spot on. But I agree with you. It is a problem, and that's why. And for most people, the single largest financial decision they will ever make is purchasing a home. Like it's the largest thing that they will ever spend money on. So you better make sure you're making it right, and you're being wise about that, and you're only doing it if it actually makes sense.
I'm just starting to see all these stories crop up, especially on Reddit, of people saying buying a house was one of my worst financial decisions, and we did everything correct. We went and we were told buying a house, we got a house, we saved for a down payment, but we're underwater from what it's worth. They're in Austin and values have dropped 25% and they had to come out of pocket $70,000. And they're asking, what can we do? Because I don't have the money to sell the house and it's not going to cash flow if I rent. And I'm stuck here.
That's right.
And the common advice is just, well, you either have to take on a job to pay for the, a second job to pay for the house, or rent out rooms.
Or prepay the negative equity. Believe me, like I did coming out of South Atlanta.
But I think this story is going to be a lot more common. And we were even talking to someone recently who believes that housing prices are going to come down so much because of artificial intelligence and from robots being able to build a property at scale really cheap and really quick. You're going to be able to automate the entire
from that, you think?
10, 15 years?
You think so?
But when you
is going to be the expensive thing.
Yeah, but the cost of land could also be cheap because you don't need to be physically in an area anymore to make a ton of money. Like we could theoretically do this
anywhere in the world.
Yeah. Like it helps to be in person. But
We've always said, look at your house as a use asset. That's why when people build their net worth, and we even caution people, if you have a 7-figure net worth, but it's all in your home equity, do you really have, because you can't eat that house in retirement. So that's why, we're highlighting the point that yes, I think home ownership can still have an element in there, but it doesn't need to be the economic driver of your success financially.
I'm seeing it now almost like a good collectible car. It's like buying a house where you might make some money off it, and if you do, it's going to be probably alongside inflation, but that there's also a chance it might be going down in value for the next 10 to 20 years.
So he says all of this while he looks at me, he's like, buy the house, Jack.
Well, before we even turned the cameras on, he was telling us about your new place.
We completely forgot about the strongest leading indicator of a bad housing market.
Is Jack buying. But the thing is, but it's funny. But in Jack's case, it makes it because he's able to buy this property for business use and with the podcast and everything, take bonus depreciation and his savings. As long as the market doesn't drop 30% or more, his savings are going to outpace any potential downside in the housing market. So I see
and it
this
is a use asset. There's a lot of value to that.
So I would see this as asymmetric upside, where yes, the downside is there, but the upside is so much greater than the potential loss. So I see that as a good.
I don't disagree with your premise, except for the fact that, okay, am I not going to make any money for 10, 12, 50? Because I do still think, even if we were to see some reduction in home prices, like what you've seen in Austin, by and large, real estate, homes are likely going to keep up with inflation. They may not make a ton, but they're going to likely keep up with inflation, 2.5%, 3%. So if you have a long enough time horizon and you can be in the house, we say we want you to be in the house for 7 to 8 years, but maybe because of where prices have gone, you might have to be in the house for 10, 12, 15 years. I don't think it's always going to be a loss. It's going to be something where you always aren't going to be able to get your money out.
I think when you account for 7% mortgage rates, 1% property tax, another 2% between insurance, repairs.
But surely we don't think mortgage rates are going to stay at 7, right? Like, we're going to see some reprieve on that at some point. Now, hopefully what happens is the house doesn't tank in value and you can't refinance. You have some sort of optionality there. If you've been paying, and again, if you kept your house in the affordability range, you had an appropriate down payment, you inoculate yourself from some of that. But there are likely going to be things down the road that if you are in a home, you're going to have opportunities so that it can become more and more affordable as you live in the home. And ultimately, again, maybe it's not going to make you a ton of money, but you're not going to likely lose money over the long, long time.
I like to bring it back to the historical location. Because, it's one of the reasons we wanted to own this building is that I couldn't believe they even let us have access to buy this building because it's right in the middle of the square.
Beautiful location.
In the middle of, so no matter what happens, it's
a good spot to be.
It is like the Fifth Avenue of Franklin, Tennessee. This is going to be very valuable property. And that's what I would tell anybody, because I made the mistake when I bought my first 2 homes in South Atlanta. Is I remember I was working in Marietta, Georgia. If anybody knows anything about the city of Atlanta, Marietta is here. And then I bought my first house in Stockbridge, Georgia, which was outside the perimeter, South Atlanta. And the reason I did was it's so affordable. And I was like, that 40-minute commute, that won't be that bad. I can handle it because I'm getting such a great deal on the property. No, that's horrible because the location was not great. I ended up, and then I doubled down. I started my first business down in McDonough, Georgia, and I bought another house. And that's the thing, is that the location does matter, and I think that that's something that everybody should think about. We've seen here in Williamson County, Tennessee, now beautiful homes are getting torn down because the land is worth, if you've got an acre property or 3/4 of an acre property, people will pay over $1 million just to tear your house down and then put a brand new thing. So the land does have some value. So I would just tell people to focus on where and then the functionality of the use. Because are you getting, and don't bet the farm literally on the farm if that's not how you make your living, because I think that's the problem. A lot of people we've seen it with the Fed data, the Federal Reserve data comes that the only way Americans are growing their net worth right now is through the equity in their house, we're trying to get people to get outside of that and build up wealth and value outside of their equity in their homes.
How much of all the gain that we've seen, though, is simply because of loose monetary policy? And I do see an argument
inflation,
that ever since the 80s that they've started really lowering interest rates, everything has slowly gotten more expensive. They've printed more money. And that's somewhat the reason why the market's gone up consistently for the last 40 years.
And we're not the only, America's not the only country that is, all the central banks have gotten with this loose money. And that's what we're all kind of interconnected in this strange game that we're doing. And that's what, it scares you if you start thinking about, I don't mind being transparent. And Bo knows what I'm going to say, because it's good.
I was wondering how long is it going to take for this to come, for this story to come up.
First election I ever voted in, I voted for Ross Perot. The reason I voted for Ross Perot was because, what was that, 1996? Right? That was George Bush, Bill Clinton, and Ross Perot. Ross Perot was out there every day telling everybody, our country is in debt for $6 trillion, and we are straddling our children with the debt of our country. And I remember thinking, oh my gosh, I don't come from any money, but I don't want the debt of, my parents and grandparents straddling me at $6 trillion. And then here we are, decades later, He wasn't wrong, by the way. I mean, now look at where's our debt now? Aren't we getting close to 40? Yeah, we're getting close to $40 trillion.
$50 trillion in 10 years.
In my lifetime, all the hundreds of years this country's existed, we got up to $6 trillion in 1996. And now think about where we are.
6X.
We've gotten way too comfortable with debt. I mean, that's concerning when you think about just in my lifetime what's happened.
Life insurance is one of those things that makes sense for a lot of people out there, but most people just put it off because it feels complicated, expensive, or time-consuming, but it doesn't have to be thanks to our sponsor, Fabric.
Fabric by Gerber Life is term life insurance that you can get done today. It's made for busy parents like you. It's all online. It's on your schedule right from your couch. You could be covered in under 10 minutes with no health exam required.
If you have kids, and especially if you're young and healthy, the time to lock in a low rate is now. And even if you have life insurance through your employer, it may not offer you enough protection for your family, and it usually does not follow you if you leave your job. Fabric offers flexible, high-quality policies that fit your family and your budget, including options like $1 million in coverage for less than $1 a day.
Fabric is partnered with Gerber Life, trusted by millions of families for over 50 years. There's no risk, and they even have a 30-day money-back guarantee, so you can cancel at any time. Fabric also has free digital wills, tools to invest in your kid's future, and more, all right from your phone.
Join the thousands of parents who trust Fabric to protect their family. Apply today in just minutes at meetfabric.com/ICHclips.
Again, that's meetfabric.com/ICHclips. MEET fabric.com/ICHclips. The link is also down below in the description. Enjoy.